Everything the bulls have been saying about Intel has been proven wrong. Their products suck. Competition from AMD and NVIDIA is chewing into Intel sales and margins. Apple leaving as a core client has been terrible for this company. It is not a value stock. This is a classic value trap stock, and it all was confirmed when we got Q2 earnings and, more importantly, disastrous Q3 guidance over at Intel after the bell today. We'll walk you through the absolute complete dumpster fire that these financials paint and talk about why this company's turnaround is likely years out, if at all. And then we'll obviously talk about this from a technical perspective. In the after hours, Intel stock is going down over 8% after being down 1% during the regular trade. Now, over the last year, in one of the smoking hottest times to be a chip maker and to sell computer chips that would power just about anything from a toaster to a computer, Intel stock is down over 25%. Over the same time period, advanced micro devices, otherwise known as AMD, down just 6%, and NVIDIA down just 7%. Stretch it out to 5 years, and this is where the Intel shareholders need to get a little bit of a tissue and maybe put on a diaper, because over the last 5 years, Intel is just up 12%, and AMD is up just 573%, and NVIDIA is up just 342%. The competition has been eating Intel's lunch. It doesn't matter if it's Alder Lake, 3 nanometer, or some foundry that is supposed to be built over at Intel. It is all led to be a complete disaster. Now, speaking of complete disasters, Q2 revenue came in. It came in at $15.3 billion. I'm laughing because that is not only down 17.3% year over year on the revenue side. And I want to remind you, we're in the largest chip shortage and supply chain bottleneck timeframe that we've ever seen. And chip companies like AMD routinely bumping up their revenue. Companies like AMD bumping up their revenue, not only bumping up their revenue, but their margins continue to go up, and Intel has declining revenues year over year to the tune of a 17% decline. Not only that, it missed expectations by $2.63 billion. I'm laughing because that revenue number was $2 billion lower than the low-end estimate on Wall Street. These are softballs that analysts lob up to these companies from the low to even the high end in terms of the analyst estimates. They're not really looking to be that right. They want to come underneath where Intel is, and then they all have a corporate party at the end of the year and slap each other on the back. Intel came $2 billion underneath the lowest estimate out of 26 analysts when they put up $15.3 billion worth of revenue. Even worse than that, we got guidance for Q3 with revenues expected to come between $15 and $16 billion. In the upcoming Q3, analysts were expecting $18.67 billion or 3% growth. The low end estimate for Intel was for $17.45 billion in the Q3 quarter. And this company literally looked shareholders in the face today and said, no, we're actually going to come well underneath the low end estimate between $15 and $16 billion in one of the hottest markets to sell computer chips I have ever seen. On top of that, they lowered essentially their fourth quarter guidance as well, as full year revenue expected to become $65 to $68 billion over at Intel. Consensus estimates for the full year were at $74 billion. Intel took a swing and they absolutely missed. Here it is from a graphical perspective. Q3, again, $15 to $16 billion. Gross margins, which we'll talk about in the Q2 quarter here in a moment, coming in at 43%. Here's your full year guidance as well. Add this all up and it's way underneath probably even the most bearish expectations over at Intel. I am completely shocked. And what has me even more shocked, again, in a great environment to sell Intel's products if they were any good, if Intel's products didn't suck like they do, well, the company could probably be generating more revenue year over year instead of being down 22%. And on top of that, they probably could be raising prices like we see TSM do, like we see AMD do, like we see NVIDIA do. But no, instead, Intel actually saw their margins go from 57% on a GAAP basis last year. I don't know if I've ever seen this, down 20% to 36.5% margins in the most recent quarter. Are you kidding me? What's going to happen to Intel when the chip cycle is over? And there's probably a lot of people arguing that the best days and the best margins on chips, those days are over. And it's even worse when you have crappy products like Intel. Look at this. Over the last year, you went from $19.6 billion all the way down to $15.3 billion when Wall Street was expecting 17.9. How does anybody over at Intel even have a job at this moment? It gets worse. Look at our cost of sales. I talked about how margins absolutely shriveled up over at Intel. Here's the impact of that. So off of lower sales from $19.6 billion in sales last year on a 3-month basis, we put up $15.3 billion worth of revenue. You'd expect our cost of those sales, since we had significantly less cost, you'd expect that to go down year over year. It actually went up from $8.4 billion to $9.73 billion. So they paid more for the product this year and sold it for less. Folks, that is a sign your product stinks like hot garbage. Look at your gross margins. Last year, you had $11.2 billion worth of gross margin, all the way down to $5.6 billion. The profits and everything completely shriveled up over at Intel. Research and development, guess what? They added to that 3.7 to 4.4. I'd probably say that's a good thing because Intel's products clearly are not meeting the mark. When your margins shrivel up this much and your revenue expectations come so far underneath what people are thinking was possible, Intel clearly needs to hit the reset button when it comes to their products. Now, we have marketing, general, and administrative. That went up from 1.6 to 1.8. So our sales declined, but our marketing spend actually went up. So we had declining revenues, declining gross margins, declining gross profits, increasing operating expenses over the last year. How does anybody have a job at this company? 5.6 to 6.3. And I'm talking about management. How does the CEO have a job? How have you not fired this guy? Look at your operating income. Last year it was $5.5 billion, and the street was probably expecting something in this range. Wall Street expecting 52 cents of earnings in the most recent quarter. They put up a $700 million loss, flow all the way down to earnings per share. And instead of earning 52 cents, which again, I want to remind you, analysts put out these numbers for Intel to easily get over these. The low end estimate was for 45 cents of positive EPS in the quarter. The high end estimate was for 64. Average those two together and you get 52 cents of earnings was expected over at Intel. And they literally put up a print of negative 11 cents. Is this a joke? Last year, you earned $1.24. This is maybe one of the worst financial sheets I have ever seen. You come down here to the balance sheet, and this should have the bulls that get into my comments and talk about 3-nanometer chip process. They talk about Alder Lake, Silver Lake, Lake of Fire. I don't care what they talk about when it comes to this company's products. Look at your inventories over the last year over at Intel. At the beginning of year, you had $2.7 billion worth of finished goods. Now you have over $4.4 billion worth of finished goods that are clearly not selling. How do we know these are not selling? Well, your revenues year over year are down 22% despite having more than double the inventory on hand. And also, even though you're dropping prices and trying to give this product away at a margin unseen in the chip industry, even in a shortage, you have to cut your margins by over 20% year over year, despite having over $4.4 billion worth of finished goods, which could go out the door right now into a computer, into a car, or whatever they put these chips into, and the client clearly doesn't want them. That is terrible news, and it's an abomination of any bull case argument about Intel that has been made in the past and the near future about this company's products. They are trash. The inventory number proves it. The sales decline prove it. And more importantly than that, the gross margin proves it as well. Stop talking about this company's products and start talking about firing the CEO and maybe getting some people in here that actually can build a product when these products should be flying off the shelves. They spent a boatload on property, plant, and equipment, and the United States government is about to give this company tens of billions of dollars to build a fab plant. This company can't even make a chip to go inside a computer that people want to buy. You really want me to believe this company is going to build a foundry from scratch in the state of Ohio and all of a sudden be starting printing profits and do it on time and do it on budget? You got to be kidding me. This company is on the pace for disaster. If they start building that foundry, that is going to cripple this company. It's not going to be the turnaround story. That is what is going to decimate this company because they can't even operate their core competency, which is to make chips and sell them in the hottest chip market ever. They can't even do that properly. You really think they're going to build a foundry from scratch in the United States and really pump that off to some real revenue? Yeah, right. Debt on this company's balance sheet down slightly, short-term debt slightly as well. We'll see evidence of that when we get to these cash flows. You better believe hot stinking mess when we come to the 6-month cash flows. We pulled down that net income number over the last 6 months. Again, most of this happened in the previous quarter. You went from $8.4 billion down to about $7.7 billion. But thank goodness, share-based compensation, despite having analysts predicting 52 cents in earnings, and you came in at negative 11 cents in earnings, and analysts projecting about $17.9 billion worth of revenue, and you came in at $15.3 billion worth of revenue. Thank goodness the management over at Intel gave themselves over $500 million more worth of stock-based compensation. Last year was at $1 billion. Now it's nearly $1.6 billion. Despite the disastrous results, I thank God the CEO still has his private jet, his Gucci shoes, and his Rolex watch. Thank goodness. Come down here to net cash provided by operating activities, and you went from $14 billion worth of free cash flow, and this was another bull case argument. They're like, yeah, maybe the products suck, maybe some things suck, but at least they have $14.6 billion worth of cash flow over at 6 months. Well, guess what? We're sitting here a year later, and now it's at $6.7 billion worth of positive cash flow. This is on a company that spent about $3 billion on dividends over the past 6 months as well, and had to pay about $1.7 billion worth of repayment and debt. And then they also had additions to property and plant and equipment. And this does not include some brand new sparkling flab that they're going to literally build up from the dirt. They spent $11.9 billion on that. So when you have positive cash flow of just $6.7 billion, but you spend about $11.9 billion on property, plant, and equipment, another $3 billion on dividends, and another $1.7 billion on paying off debt. That is a big problem. If these sales don't turn around and the margins don't come back, which in the foreseeable future look like maybe they won't. Here's even more evidence. If you want more evidence out there that Intel's products suck, I don't care what benchmark you're looking at or what Computer Geek website and blog you're on, here's evidence of it right here. For the last 3 months in the notebook computer category, you went from $6.7 billion worth of revenue all the way down $2 billion to $4.7. So it's really this notebook business that has absolutely deteriorated, because when you look at desktop, and on a desktop computer, Intel chips which run way too hot to work properly in a notebook, at least on a desktop, we can use liquid nitrogen and cool those chips down so they don't blow up your entire house. Well, revenue stayed relatively flat on there, although those are still down. Once people realize that these chips are absolutely disasters in notebooks, you saw that absolutely fall a cliff. Data center and AI, one of the hottest segments of the market. In fact, you have Mark Zuckerberg over at Meta just pouring hot money onto fire when it comes to data center and AI, among other companies out there. And look, your data center and AI revenues went down over the past period as well. When you come down here to operating income, this had me concerned a year ago. And now we know that Mobileye probably not going to be spun out, probably because the market itself has kind of cooled. But this was, I had concerns about over the past couple of months when they were talking about spinning out of Mobileye. Here's your operating income over at Intel, down on computing, down on data center and AI, down on network, down on the foundry service. You really think this company is going to turn around this foundry service? They can't even make money in this environment. Income going down as well. The only operating income that is actually positive and growing is Mobileye, but unfortunately it's only $190 million, which quite frankly is just a rounding error from that perspective. This has been the classic case of a value trap when you factor in the trailing 12 months earnings and maybe even the track record of Intel. This stock has sometimes looked okay and looked good from a price to earnings and a price to sales perspective. And certainly when you pull up the fact that this stock has a 3.5% yield, probably before the 8% drop that we had today, well, there are some things to like. But if investing was as simple as looking at one or two ratios and a dividend yield, folks, we'd all be watching this video from our beach house in Malibu. It's a lot more complicated than that. And in fact, I think it revolves primarily around revenue growth, margin expansion, and dominance inside your market. Right now, Intel has none of that. They have declining revenues, they have declining margins, and their competition is absolutely dominating them. NVIDIA and AMD are like the Yankees and the Lakers, and Intel is that tired old veteran that had some good years in the past, but is clearly been passed by. Now, from a technical perspective, we've been locked in a downtrend. Now, what's concerning about this stock is from November of 2017. I know I'm going back a long time. So over 5 years, this stock traded in a relatively tight range from here about $44. Now, it got all the way up close to $70, but the range is probably more close to about $57. And certainly on a stock that pays a dividend and has at least some investors believing that their products will turn around and they'll actually design a good computer chip and haven't been passed by the AMDs, NVIDIAs, and Apples of the world. The stock consolidated between 45 and 55 for 5 years. Now, unfortunately, and we talked about this many times when you talk about this stock from a technical perspective, when it broke through the bottom, that spelled absolute disaster. And it's illustrated when we look at this volume profile. That's here on the left. And you notice, obviously, during the 5-year consolidation, when these bars on the left-hand side, when they start to stretch out to the right, it's basically showing you, oh my gosh, there's a ton of people that acquired the stock during this range. And quite frankly, you could probably push the price action down between $45 and $52 per share. That's where the buyers were with Intel. But if those buyers dried up, because for 5 years, they materialized right at $44 per share over at Intel, once that dried up, you knew it was going to come back down to the next lower area, which for Intel down here closer to $34, $35 per share. And then when we zoom in on this stock chart, we can see in the after hours, I got a fake red candle on here, but we traded down to about $36 per share. We are retesting the 52-week lows on this stock down here at about $35 per share. We are looking for Intel to probably find some footing right here in the $35 range. It's likely it probably will. You could have some type of relief rally, but what was 5 years of support up here at $45, the longer it takes you to recover that, and I tell you what, based on the 3-month and full year guidance we got over at Intel, I don't think it's coming back anytime soon, but that support that was at 45 for 5 years is now going to be resistance, in my opinion, probably in the foreseeable future. At the best, Intel is going to be locked between 35 and 45 for the time being, as there will be a cohort of investors that simply look at a low PE, look at a dividend yield, and maybe look at a tech blog that probably was paid by Intel to say, oh yeah, our chips under the most premium circumstances and and being liquid cooled with nitrogen and icicles can perform as good as AMD or NVIDIA, or certainly not Apple. And so there will be some demand for these shares, I think from about 35 to 45. I personally would simply cut bait with this stock at some point. I think you can get into the SMH ETF to get a little bit of exposure to Intel, just in case maybe this is the bottom. Maybe it is a turnaround story. It doesn't look like it from a revenue perspective, doesn't look like it from a margin perspective. I'd rather lick my wounds if you've been long Intel and realize you do not have the expertise to pick winners or losers, especially if you've been long Intel and you've avoided AMD and NVIDIA. You do not have the chops to invest in this category. I would put your money into an ETF and let somebody else make those investment decisions for you. The fact that we're at a top of a downward trend wouldn't necessarily run into this one anytime soon, but you make any kind of retracement on this one back down to the bottom of the channel, retest 52-week lows about 190. That is where I'd get interested in moving on that. I would get out of Intel, cut my losses, and realize picking individual stock in the chip sector. If you've been in Intel and avoided the winners like AMD and NVIDIA, you clearly don't know what you are doing. Admit it to yourself and cut your losses. Hopefully you guys enjoyed today's video. I'll be back in soon with more. Good luck with your investments.